Well, welcome back. Futures this morning indicating a gain at the start of trading this morning. Take a look. The Dow Industrials right now up 134 and the Nasdaq up 261 right now. After yesterday's major sell-off, all three major indices plummeted yesterday after the Federal Reserve held rates steady. However, three Fed officials dissented on the decision, instead wanting to raise interest rates. When all was said and done, the Dow Jones Industrial Average was down 1,153 points. That was better than 2% lower. The Nasdaq was down 434 points. That was almost 2% lower. Tech stocks selling off as Mag 7 stocks report second quarter earnings, and AI spending concerns take center stage for investors. Meta reported mixed earnings yesterday. The company beat on revenue. However, investors focused on weak cash flow, higher AI spending, lower than expected third quarter guidance, and rising expenses. Despite revenue beating expectations, the stock this morning is down about 9% on Meta at 533. Microsoft, meanwhile, reporting a double beat, hitting $90 billion in revenue for the quarter. Joining me now is Constellation Research CEO and Futures Forum founder, CEO Ray Wang. Ray, great to see you. Thank you so much for being here. I want to look ahead to today as well. Apple and Amazon both report after tonight's close. But first, give us your sense of what happened yesterday.
Good morning. I mean, it is a tale of two earnings, right? Microsoft basically showed that you can invest in AI, build out data centers, and still make money on AI. I think everyone was looking at the cloud growth up 27%. They were also looking at the fact that to record Azure growth, 43% in Q4. And of course, looking at the Microsoft 365 growth at 25%. So 30 million Copilot users got the market excited. Meta, on the other hand, the question was, you almost didn't make that number. You missed EPS, but you beat on revenue. But the question was, what's going on over here with the data centers, the capacity, the investment? Once again, just like the metaverse, the investors are wanting, what are you doing with that investment, and what are you going to do with that excess compute capacity? And that spooked the market.
Yeah, sure did. What about Apple and Amazon reporting second quarter earnings after the close tonight, Ray? What are your expectations?
On the Apple side, this is interesting. This is Tim Cook's final call. So expect iPhone revenues to be up probably 20% year over year, and services to hit up to 31 billion. This is a market where Apple looks like the winner in AI because they haven't been blowing hundreds of billions on CapEx for AI because it's all sitting on the devices. The problem is memory. Memory is expensive. They're worried about what's going to be expensive there, and if any price increases might impact the super cycle in terms of any kind of upgrades. On the Amazon side, definitely looking at CapEx numbers. Investors want to know, are they going to continuously spend $200 billion in CapEx? Are they going to grow AWS? How is Prime Day doing? And of course, their ad business has been growing like crazy, almost over $60 billion in ads set for the year. But the question is free cash flow. They're going from almost $26 billion in free cash flow to down to the single-digit billions. And so investors, once again, are going to see, is there ROI or no ROI here in AI?
Yeah, great point. It's all about this AI spending. The other major story, of course, is the Federal Reserve, and I want to bring Chris McMahon in on that from Aquinas. Chris, what did you make of Kevin Warsh yesterday? After the meeting, he said markets were responding to the economy rather than to the Fed. Pressed later, this is what Nick Timiraos is writing in the Wall Street Journal this morning. Pressed later on why he hadn't acted on his inflation pledge to raise rates, he suggested the higher borrowing costs were doing some of the work of the rate increase that the Fed hadn't had to make. But look what happened to yields. We're talking about the 10-year now at 4.7%, Chris. What was your takeaway from the Fed meeting?
Yeah, I know Warsh said he wouldn't be as rigid, right? But sometimes rigidity is good. I think that he is opening them up for some scrutiny when he's not talking about raising interest rates. I think he's just so concerned about raising interest rates now. I think, he's trying to buy a little time. Hopefully this tick up in the long-term rates won't be too problematic. We are concerned, Maria, very much about higher rates longer. We think that's going to really have some make the market struggle terribly, and we're hopeful that we see an end to this thing in the Straits. If that happens, we're hoping oil prices regulate, and then that we're looking to give him the cover to at some point reduce interest rates. As you know, three guys wanted to raise them yesterday. We're a long way from interest rate cuts, but we got to get there, I think, by the second quarter of next year. Otherwise, we're going to have some real trouble in the real estate sector for sure.
Yeah, Nick Timiraos in the Journal writes the 30-year bond yield jumped to 5.2%. After the meeting, the dollar weakened and stocks fell, a combination that points to worry about inflation rather than confidence in growth. Ray, what's your take on that? You're all about growth.
Yeah, any interest rate hikes is really going to hamper the tech side, especially when we're looking at the IPO market and, of course, what's going on with tech earnings. We've seen the SaaS apocalypse where software companies are being punished, but these are companies growing in the high 50, 60% and rule of 50, rule of 60, and growth in 20 to 30%. And so those interest rates make a big difference on the tech side.
Yeah, and chip stocks this morning look like this. The chip companies shed over $1 trillion in value just since last Friday, Ray. Samsung now says that the chip shortage is expected to worsen and extend well into 2028. That means prices will likely stay elevated for memory as well. Your thoughts on chips right now?
Yeah, the chip stocks are going up. That means every component, for example, in your phone, in your refrigerator, from your car, anything that's working on a chip, you're going to see those prices continue to go up. So that's adding to the inflation, along with all the money that's being spent on the AI side. So you're seeing that inflation on the tech side that's actually driving up prices and also driving up the fears in terms of the AI bubble.
Yeah, and then you had OpenAI CEO Sam Altman in Washington yesterday, meeting with White House officials to talk about the fears surrounding potentially uncontrolled artificial intelligence and the need to pace new innovation. We've talked about this for a while now on this program, Agentic AI, and the worries around it and whether or not these agents can act unpredictably. Here's what he said to that yesterday. Watch.
What do you say to people who might be scared right now at home about AI, maybe about losing their job, about like just being fearful after the hacks?
I think it's very natural to be fearful after any new capability level. Obviously, we're taking this super seriously and we'll continue to do so. But I would say I understand, like I get it. I think this is, a lot of AI has gone super well, and this is a moment where people are like, okay, we're at a new level.
Well, it sure is a moment, Ray. Your reaction?
It's really important to build AI governance and guardrails by design. And what we're seeing here is the fact that these have been thought about, but the AI sometimes is a little bit smarter, as you saw with the OpenAI hack in terms of really jumping the rails in terms of being able to go out and actually do things that weren't expected. This is really important, especially when it comes to testing, when it gets to medical devices, when it gets to any human contact. So it's going to be important to think about what those rules are, what those guardrails, and AI governance. It's the hottest topic in boardrooms right now.
Yeah, it's also the hottest topic in Washington, I suspect, as well, with the White House trying to put a framework in place. Ray, great to get your take on all of that. Thanks so much.
Thanks a lot. Good morning.